Coming up, the Trump administration issues new tariff warnings as the July 9th deadline looms. But despite what seems like real tariff risk, we still see the stock market putting in fresh all-time highs, with the S&P 500 trading just below 6,200. This is putting in fresh highs despite the worries around tariffs. But at this point, it feels like the market is pretty much discrediting all of the tariff worries, and we're kind of back into this euphoric state where markets continue to trend higher. And with the breakout above all-time highs, the question for today is whether or not this is sustainable or if this is a weak kind of fake out before we do see some of the tariff woes come back into the picture. Treasury Secretary Scott Bessent warned Monday that countries negotiating trade deals with the United States could still face steep tariff hikes on July 9th, even if talks are ongoing. Bessent says that we have countries that are negotiating in good faith, but that they should be aware that if we can't get across the line, we could spring back to the April 2nd levels. And just a reminder, April 2nd levels are what caused the market to kind of enter a free fall period over here. And since then, where we basically discredited the worst case scenarios of massive tariffs, and now all of these negotiations seem to be going well. But if they do materially sour, is there a possibility that we could reverse a lot of these gains very quickly? Well, basically the short answer is yes, the markets have done crazier things before. And if something breaks down in the tariff negotiations, it is very possible for us to get a 5 to 10% pullback in this market very, very quickly. In fact, believe it or not, we've kind of done some of these same things here before with Trump and tariffs. Back in 2018, the Trump administration was big on tariffs, and there was this whole trade war with China. And what we saw was a very eerily similar market environment where the market went into free fall and at one point fell by 20 or 21%, which is almost perfectly exactly what happened this time around as well. Then the market made a push all the way back up to those all-time highs, and what is really eerie about this is that look what happened next. We briefly put in fresh all-time highs, and then what happened? Well, we had a pullback of just around 7.7%. So in my view, we've been in this one directional shoot to the upside, and it is very appropriate for markets to pull back. Now, I'm not necessarily saying I'm bearish or think that the market's going to double top and fall down, but in my personal view, you've had a lot of great gains. If you've been on this run with us, then congratulations. There was a lot of money to be made riding the upside in the indices and individual stocks. And, for people who took the risk and loaded the boat when everybody else got scared, you got rewarded very nicely for it. But now with markets returning back to all-time highs, I do want to just be cautionary as we enter into those all-time highs that you could get some pullbacks and some taking of profits, if you will, from those who are cashing in on the big gains they made. And by the way, you may notice that the background around me is a little bit different than usual. We actually moved this weekend into a new office here at A1 Trading. Our team of 7 in-person people and a couple people remote, we have kind of upgraded our setup a little bit. We're in a nicer office, a nice area, and really excited to kind of take that next step. So for those of you guys who have supported our content, just know that there are real people behind this channel that create these videos, filming, editing, research, all the stuff that goes into this content, and we're super excited to be taking that next step as a team. So now taking a look at some of the positions that I'm in, I'm still trailing stops on the Russell 2000 index position. I entered this a couple weeks ago and I'm still in this trade. So I've trailed my stop once and now a second time further into profits, locking something in. So if this market were to roll over and we do see a market sell off, then I'll take my profits on this trade. But if we continue to push higher, which I do think that we can do for a little while, I'm not necessarily saying I think we're rolling over right here, but I do want to be cautionary not to add too much positioning here because I think a lot of the easy money is sort of behind us now. That being said, I'm willing to hold this trade if we do pull back into support, but I'd really just need to stop out if we broke through this support level. Another trade I've been talking about recently is this new position that I took on gold on Friday. So on Friday, we saw a big sell-off here to close out what was a pretty horrendous week when looking at price action on a lower time frame. You had kind of a downtrend all week last week, put in that high, and then completely fell over here in the last few weeks. So, I ended up taking a long position. We hit a level of support on the daily chart and this longer term upward trend line. And I do like the bull case for gold. You can actually see the Edge Finder, which is my market scanning software. Behind the scenes, I mentioned we have a company here. We build all sorts of tools. So we do content creation and software design. And our primary tool is the Edge Finder. We also have the stock box, but the primary one for this channel that we talk about a lot is the Edge Finder, which is a tool that helps us scan sentiment, technical, and economic data automatically across the board and helps us to find better trading setups. So the gold bullish reading here was part of the reason why I went long. It's also part of the reason why it's not currently there. Actually, yes, it is. Russell is still a bullish setup as well, though we have lost a little bit of score points here recently. But I'm long gold, I'm long the Russell, and essentially the way this function works is that I look for top setups each and every day, and if there's a nice technical alignment to the trade, then I usually will look to get into the trade. In fact, I actually did a recent video on how to use the top setups page, and we'll leave that in the top right hand of the screen if that's something that you would like to watch in more detail on how I actually use this trade, but or how do I use these top setups algorithm readings to find possible trades. So I'm long gold, I'm long the Russell, and as you can probably imagine based on that, if you're a fundamentalist, you know that my bias here is actually looking for rate cuts. And we see 10-year yield continuing to trend lower. This is a good sign for my theory here that rate cuts are coming in the US. We've seen some economic data here out of the United States that has been a little bit soft, right? So you've had some weakness in GDP numbers here recently. PMIs have been soft, retail sales have been soft, and we've seen cooling inflation overall. So I do think that while the economy is not necessarily entering into a recession, we are seeing a slowdown in what was a really strong economy starting to just kind of normalize here a little bit. And so my view on that is that I think that the Fed should be looking to cut interest rates, and we do see that rising in terms of probabilities, and that's why the 10-year yield is moving lower, and also why the dollar has been so weak recently. Remember that the dollar typically trades, not always, but most of the time, typically trends in the direction that the market thinks interest rates are going to go. So if interest rates are moving lower, the dollar typically is moving lower as well. And if interest rates are, holding steady or moving higher, and really, if you want to get nitpicky about this, it's really interest rates in the US versus interest rates in the other places. So if the interest rates in the US are looking to fall faster than other places, or more so than previously expected, that can cause the dollar to be weak. Now, this is why also you can get, if the US is cutting interest rates very quickly and you have, for example, Japan cutting interest rates not at all, this is where you can get some very strong currency trends as well. So dollar index, like I said, trending lower here, broke below this support level, and this was another reason that I wanted to get long gold. So I saw the pullback on gold, aligned with my strategy, top setups indicator looked good for it, went long gold. So that was the trade breakdown. I do think that the gold trade here is a way that I'd like to play this bearishness on the US dollar, but I am also interested in some currency pairs. So let's take a look at some of those. If we take a look at euro dollar, this one, there's no entry for me because we've pretty much run away here to the upside. Looks amazing. If you're in a bullish setup, congratulations. For me, this would be more of a pullback sort of market if we can get it. Moving on to the pound dollar, same sort of story, looking for pullbacks before any entries. In fact, let me just do a quick scan on the top setups just for currencies. So what I can do is I can go to top setups, I can go to category, major currencies, minor currencies. And what we'll do also is I'm just going to remove neutral readings. And so you can see we have a pretty strong bias against the US dollar at this time. British pound against the US dollar, Kiwi dollar, Euro dollar, these things, and the Australian dollar all getting strong readings against the US dollar. So would be looking for pullbacks on the British pound. Dollar yen, I believe this is a neutral. Nope, it's a bearish reading as well. So in terms of where I'd be looking for dollar yen setups, I'd probably have to wait for a retracement back up into the top end of this range for possible setups on that front. If we take a look at dollar Swiss, this is a really clear breakout to the downside, and we can actually mark this as a resistance zone as well. Looking probably for a pullback up into 0.81. If we take a look at what else do we have in terms of, we do have a bearish reading on dollar Swiss. Dollar CAD is another one. Dollar CAD, if it were to get a retracement up to like 1.3830, I may look for a possible entry there. Although I do have a good bit of exposure already along the CAD, so going to be patient on that one. So there's a bit of the currency trading side. CAD Swiss, this is a trade that I have currently, not going so well for me, but as the CAD gets cheaper, I actually am looking to build bigger positioning on this. While dollar cost averaging is not necessarily the most popular topic when it comes to Forex on YouTube, it is a strategy that I've used for a very long time. So I have some long entries on my CAD Swiss trade that are in the red at this time. However, I'm looking to add further, and it may not necessarily be CAD Swiss that I trade. I'm building what is called a basket. And let me express a little bit of what I mean by that. So let's say that I'm bullish on the CAD, and I generally think that the Canadian dollar is likely to strengthen in coming weeks or months. So if that's my theory, I may actually choose to trade something like Aussie CAD, I may trade Euro CAD, I may trade dollar CAD, I may trade CAD Swiss franc, right? So I'm taking what is called a basket, where I am essentially getting long the Canadian dollar against several other currencies. So I am looking to do that. I'm looking to build. I have a very tiny position currently on the Canadian dollar Swiss franc, and I'm looking to either build it further on this pair or add it into other currency pairs as well. So for example, if I take a look at like the Australian dollar versus the Canadian dollar, I did have a short position here, and I'm looking to add another one if we can get a move up to 0.90. And I'm essentially scaling in and scaling out of this Canadian dollar, long side bias. Now, why do I have a bullish perspective on the Canadian dollar at this time? Well, if I take a look at our eco surprise meter here, what we can see is that the Canadian dollars, well, actually it's lost a little bit of its score. It's sort of in a neutral territory, but I'm looking specifically to trade the CAD, which I think could benefit from rising oil prices against things like the Australian dollar, against things like the euro, which is getting a weaker reading. And right now those would probably be, and the Swiss franc, right? So that's where I'm kind of preferential to the CAD over these currencies. So that's basically the idea overall currently. I also want to let you guys know, if you made it this far in the video, to stay tuned, because tomorrow we are kicking off our biggest discount price on the Edge Finder all year long. We're doing a 40% off discount, and it's a one-time payment to get access to the Edge Finder. We do this every summer. This is our summer sale that we're starting in July. So if you're interested in that, make sure to mark your calendar, write this down in the description down below. The promo code that you see there, you can use that to get access to the Edge Finder for 40% off. You can also, if you have any questions, send us direct message using the first link in the chat down below to speak directly to a real person on my team about the product. If you have any particular questions, if you'd like to set up a demo call, whatever you need in order to make sure that it's the right fit for you, we want to make sure that we answer any questions prior to you purchasing the tool. So don't miss that. That sale starts tomorrow. We'll have more details on the channel as that gets closer.
All right, man, let's make a bet. Whoever gets funded first, the other person has to pay him $100.
All right, I'm down.
Sweet. With my new fair value gap, triple witching timing strategy, you stand no chance.
Okay, I just got funded.
What? How? We just started.
With Maven's new instant funding program, you can get funded for just as little as 19 bucks. They offer some of the best industry pricing, fast payouts, and you can trade pretty much anything on their prop firm. If you'd like to check out Maven's instant funding program, the link and information can be found in the description below. You owe me $100, man.
Come on, man, that's not even fair.
One thing I think is really important to mention in the market environment that we are in, we've gotten sort of a swing from a very high volatility market period where we saw a VIX up in the high 50s all the way back down to a low market volatility environment. Believe it or not, we've done a round trip very quick. The world panicked, and then now the world seemingly is back to normal. However, with trade deals still uncertain, I'm very cautious in this market. Like I said, I am very long, risk assets. I have stocks that I've bought that I'm still holding on to. I have a long position on the Russell. I'm still very positioned for risk on environments to continue. However, it does make me a bit cautious that as we approach the deadline for many of these tariff ideas and the trade deals, that the market is sort of completely all good with everything. To me, there is some risk there. And for me personally, that is part of the reason why I bought my gold position. I talked about this on my Sunday video, but I do take a portfolio approach to my trading account, meaning I like to hedge things a little bit when I think that, even though I think stocks and indices are trending higher and they look great, and I do want to continue to hold them long, I recognize that they look a little bit stretched. They've had a really good run, and I'm picking up some exposure that is a pseudo hedge. So if you get some sort of geopolitical outbreak or the trade deal sort of dynamics breakdown, gold could actually be a really nice hedge to that situation. If it doesn't work out, I'll pay a small premium in the form of a small loss, or if it does if something breaks down in the trade war stuff, gold could be a really nice hedge. I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.